Question number 4 and 5 needs a accounting background knowledge. So you have already that knowledge. But anyhow, we will be discussing back again these two questions. Let us read these two questions. A company uses direct write-off method to account for uncollectible accounts receivable. The company subsequently collects an accounts receivable that was written off in the prior accounting period. The effect of collection of the accounts receivable and the current ratio and the working capital will be. A company uses allowance method to account for uncollectible accounts and accounts receivable that was previously determined uncollectible and written off was collected during May. The effect of the collection of the company's current ratio and total working capital is. So this we have some background. Let us discuss that background first and then we'll come back to that question. So we know that company sales or revenues are collected in two ways. One is on cash basis. Another is on credit basis. When cash basis is there, we know that debit cash account and credit sales or revenues account. When it comes to the credit, debit, we are not receiving cash. We are not receiving cash in case of credit. However, the amount is due. The amount is due from our customer. So we will debit the accounts receivable and credit to the sale. Or normally we can say it is debtor. Debtors is nothing but accounts receivable. Credit, the sales or revenue. There is no need of explanation of this particular transaction. So what will happen next thing is that then these amounts need to be collected, accounts receivable. This need to be collected. So this collection we will give to them some time amount. Credit limit will be given to them. Credit time. The credit time might be 30 days, 60 days, 90 days. It is depend upon the credit policy of the organization. Say for example, there are accounts receivable today 100,000 in a 1 month, for example, in a month of May or whatever. So this accounts receivable we will be collecting next. So for example, we are giving 60 days credit. So in 60 days credit, we need to collect this amount. Say for example, out of 100,000, we have collected 90,000. What is the journal entry when the accounts receivables are collected? What should be the journal entry? When we sold, the entry is debit accounts receivable and credit the sales or revenue. What is the journal entry on collection of 90,000? What should be the journal entry? Collection of accounts receivable. Debit what? Debit?
Cash.
Cash. and credit what? Accounts receivable. So this is on collection, right? And remaining 10,000, they have not paid it. They have crossed the 60 days limit. What we can do, on this particular matter, we can consult them through various tools. We can send reminders, we can talk to them, we can send our collection people, all these things. By that time, we have collected almost 8,000, and it took us, say for example, 6 more months. So in a period of 12 months, we collected again almost 88,000. So in the rest of the 6 months, we collected a debit cash. This is 90,000 and this is 90,000, and here 8,000, and credit the accounts receivable 8,000 we have collected. So then what happened? This 2,000, that person details are not there. He left that particular place. He's not there, and we have received information from the other sources where he is residing, that he was in losses and he left. We don't know where he's gone. So now the company has to take a decision. The company on the 31st December decided that now this 2,000 we are not going to collect. So this is called confirmed bad debt. Bad debts written off. So the company has a policy that within this so and so month, if the amount is not collected, and based on the circumstances report and all these things, it is confirmed that even if we go for a legal, all these things, formalities, we can't collect. It is not possible to collect. There is no such a condition is there. So the company will write off this bad debt. We have not collected the cash. However, the amount which is receivable from that particular person is permanently we are not receiving. So we need to cancel the account receivable. So credit the account receivable. Neither we are receiving cash, nor we will receive in future cash. So this is recorded as bad debt.